Alright guys, Gen Z Ricer here, and today we got a portfolio update video on Robinhood. We also are, well, I'm pretty much going to tell you guys what I'm doing with my account in 2025. This is the last day of the trading year and the year. Tomorrow when I upload this video, it's going to be January 1st, 2025. So this is also going to be like a time capsule video. 1 year or 6 months from now, I can look back and say, okay, so this was the first of the year. I had $123,000 in my account. And now I got $200,000 in my account. If you guys want to follow along on this journey, like and subscribe to the channel, because what other 22-year-old do you know is investing his life savings into stocks? And when I say his life savings, I don't mean $1,000 or $10,000. This is six figures. This is $125,000. So this isn't exactly chump change, you know. What other 22-year-old do you know has $100,000? I mean, there are some, right? Obviously, but 99% of them probably don't. This isn't exactly your ordinary journey from an ordinary 22-year-old kid. But anyways, looking at our account right now, $11,000 in cash left. We spent about probably $12,000 today buying stocks. 1,150 Coney. msty, we don't got 2 shares or 8 shares anymore. We got 100 shares of msty. YMax 4,300 shares. You guys know the intent was to get 4,200 shares of YMax, and we actually got to 4,300 shares of YMax. And you know, somehow we ended up with an extra $10,000, and so we're going to be spending that. So realistically, we might have 4,500 shares of YMax, maybe 1,300 shares of Coney, 200 shares of msty. I don't know yet. We're going to spend the money as time goes on. I want to bring something up real quick to YieldMax investors and people sitting on the sidelines. I want to tell people that you got to be smart with your money. And so, for one, don't be like me investing his life savings, or this guy, because he's YOLOing his account, $86,000 in margin into YMax alone. So, I mean, these people are crazy, but I mean, that's coming from me, right? But please acknowledge that when the market goes down, a lot of people either can't stomach the risk or they don't understand that these funds will drop a lot in price. You can see the market was going down today, and people are talking about msty, msty, and other YieldMax funds. This guy's talking about he's dollar cost averaging, but the dip keeps on dipping. Keep scrolling down. Coney, he needs advice. He bought in at 16.25. He said he put too much capital into Coney. This guy says, is it time to jump ship on msty? You know, a lot of people are scared right now. msty, what's going on? A lot of people don't even know what these funds do or why they are going down a lot. But I want to focus on the guy who said he spent way too much capital into Coney at $16. Now guys, with these YieldMax funds, you do not want to spend all your money at one time. We can use let's say, where is it, msty, for example. A lot of people were clowning on me because I had 2 to 8 shares of msty, but if you look at my history right here, we saw msty at December 5th, and we got 2 shares at $35 per share, and then we got a couple more shares, 3 shares at $29. Now guys, when you buy into these funds, do know that they're very volatile, and when they're going down, they go down quickly. We started buying into msty, 12 shares, $27.51. Normally, I don't use buy orders, I use limit orders. And when a limit order hits at $27.50, for example, I'll put the next limit order at $27.25 or 27 flat. And you see how I don't spend all my money at one time? I spend it in increments. 20 shares, $27.15. 20 more shares at $27. 20 more shares at $26.50. 20 more shares at $26.05. This was after market. But as you can see, I don't spend all my money at once. I break it up and I dollar cost average going down. And I feel like that is the key with these funds. And again, good thing I didn't buy msty and put all my money into msty at $35. You just really gotta be smart with your money. You got dollar cost average. When you get your weekly and monthly distributions, also dollar cost average with those funds also. But yeah, we recently got Snowball Analytics, and I don't know if it's 100% accurate. I don't think it's 100% accurate. We can see it's estimating we'll make $87,000 next year in the next 12 months. We will make $7,200 monthly. Now, this is very bullish, guys. I mean, this is just something nice to look at, but I don't take all of this at face value, because if we look here, we can see, if I'm being conservative, right? It's saying I'll make $4,400 per month with the money I have in my account alone. When I use under $52,000 in margin, it says I'll make $6,900 per month. So using $52,000 in margin, right? It'll generate an income of $6,900, and that's less than what Snowball Analytics is telling me, because they are telling me I am making $7,200 per month with my cash alone. This doesn't include margin yet, so there's a very big discrepancy here. But I mean, it's nice to look at Snowball Analytics. At least at the bottom, it'll track how much actual dividends I am making periodically. So right now, the plan is to buy all of these stocks right here, which are from each group. YMax pays weekly. Group A, Tesla. Group B, Nvidia. Group C, Kony. And Group D, msty. The plan hasn't really changed. We want to have approximately about these many shares for each of these companies, and then we are going to get into margin. I feel like, and this is the critical thing, I feel like to make money in YieldMax, you need to use margin. And again, not financial advice. I'm 22 years old. Don't take what I'm saying at face value either. But pretty much, if I invest $100,000, it'll take me 26 months to break even and get my initial investment back. That's a very long time and a lot of time for things to go wrong. When you use margin, for example, it cuts this 26-month break even to 7 months if I'm using these numbers right here. This is saying if we spend $52,000 in margin, it'll take 7 months to break even. That margin becomes equity, right? Because you pay off your margin, so those shares are yours now. 7 months to break even on $52,000 of margin. So if you double this, 7 months. So now you got 14 months. In 14 months, if you pay off this $52,000 balance twice, you will have over $100,000 in equity. $100,000 of shares that are yours now. And this would pay off this margin. Now, this is being optimistic that everything is chilling, there's volatility in the market, and these funds keep paying their average, weekly and monthly distributions for another 14 months. It can drop by 50%. I can't see the future, but from these projections, I should be doing good in 14 months from now. And that's why I think using margin is very important, because you can get to your break even point very quickly, way quicker than just leaving your money in and just waiting for it to break even by itself. People will tell me, and I've seen this on Reddit, people tell me my plan to use 50 to 60% margin is very risky. Yeah, it is, because if the market goes down, if they change the margin maintenance, then I might be in a margin call. But the thing is that I don't spend a lot of money. Obviously, I don't spend a lot of money because I have a $120,000 gamble at 22 years old. But so I'm gonna save all my paychecks pretty much, and that money is gonna be inside the bank account. That money acts as a buffer, so if I get margin called, I'm able to pay the margin off. And the second thing is, because this account will generate so much in income, if I get a margin call semi often, then this money that I get weekly from YMax and from whatever group stock that's paying that week. So if it's on week A, it'll the Tesla distribution that will go towards paying the margin call off. So that's why, in my opinion, I think that I'm kind of safe, even though I'm using 50 to 60% leverage. I got my job and I got these weekly distributions as a safety net. That's essentially the plan. I mean, hopefully the market keeps going down slowly, not a crash, but just slowly, and I'm able to dollar cost average going down. As I finish using my $10,000 left in my Robinhood account, I'll switch to using margin and I'll buy more shares of these companies. And in doing so, 14 months from now, if I break even on my balance of $100,000 in margin, because 50,000 to 60,000 margin times 2, and that's about $100,000. Once that margin gets paid off, then I have a cash cow. At that point, I'm going to have a $200,000 portfolio If things go correctly, $200,000 portfolio, and then at that point, I can use another $50,000 in margin and just keep scaling the account from there. But anyways, guys, that's pretty much my plan for 2025. Ending the year off $123,000 in value. We're about to spend all our money. Once we spend all our money, we're going to be going into margin. And with that margin, hopefully we break even in 14 months. And then at that point, we got a cash cow. No one can call you stupid anymore because the gamble has paid off. And if the gamble pays off, we're going to have what? $7,000 per month in income, and we can spend that money. Maybe let's say 25% is reinvested into the YieldMax funds, and with the other 75%, we can use that for growth stocks. We can buy VOO, SPY, if we want to go safe, SCHD, XDTE. The world's the option. But the thing is, we gotta get the income first. Once we get the income, the doors start opening up. We can do anything we want. We can even learn how to option trade. But yeah, guys, that's my plan for 2025. Hopefully, you guys have a good 2025 also. Hopefully, your portfolios grow a lot. Hopefully, I don't lose my life savings in YieldMax. And yeah, that's pretty much it for this video. If you made it this far, thank you for watching.